gold moves first, and then Bitcoin catches up. So I think that there is going to be the network value of gold just went up by a lot. And so let's say gold settles at 5,000. That puts fair value of Bitcoin, like 1.6 to 2 million.
Hello everyone, this is BTC Insight and welcome to yet another deep dive into BTC Insight. Before we jump in, make sure to hit that like button and subscribe if you haven't yet. You won't want to miss this.
According to Tom Lee, crypto is full of experimentation, but once in a while, a handful of these companies break out into the mainstream, and they become incredible better businesses. His prime example? Tether, the largest stablecoin company in the world. Despite having around only 150 employees, Tether is now valued at roughly $500 billion. That translates to an astonishing $3.3 billion per tenured employee. For perspective, JP Morgan, America's biggest bank, employs over 313,000 people and is valued at $860 billion, or around $2.8 million per employee.
Crypto is full of experimentation, but then once in a while, a handful of these companies break out into the mainstream, and they've turned out to be better businesses. Stablecoin is an example. A tokenized dollar functions better than the US dollar right now. Exhibit A on companies is Tether, because Tether today has only 150 employees that have been there more than 12 months. I think they might have more than that now. But they're valued currently, according to the media, $500 billion, $3.3 billion per tenured employee. And they earned $20 billion, which would make them a top 10 most profitable bank. At $500 billion, they're second only to JP Morgan, which is valued at $869 billion. JP Morgan has 313,000 employees. Okay, so JP Morgan's valued at 2.8 million per employee. Tether's valued at 3.3 billion, and they're making more money than every bank in the world, and twice as valuable as Goldman. That's a breakout. Polymarket as a prediction market functions far better than the CME, but the real breakout was the 2024 election. The prediction market for Polymarket called 50 of 50 states correct. Nate Silver's model, New York Times, none of these models were even close. Only Polymarket called the election in 50 of 50 states. And as we just mentioned, Trueflation, to me, and I've watched its correlation to yields and spreads and even the curve, it's a better predictor of how markets are reacting. So Trueflation, which is a blockchain-based inflation tool, works better than CPI. And Trueflation comes out every day. The first theory I would point out is that if you have a room of geniuses, then the average person's a genius. Or the best you can do is to be average. So if every hedge fund employs expensive tools, buys alternative data, but from the same vendors, they're all going to have the same conclusion. Because they all were geniuses and get an average result, which means there's no edge. The second explanation is that alpha is a finite source. And in the past, hedge funds took alpha from retail. And that's like why hedge funds did so well from like the 1980s through the mid 2000s. But now the hedge funds are stealing alpha from each other. So the net result is average results. And the reason they're stealing alpha from each other is that they all employ the same time frame. Retail actually operates more like permanent capital, right? They're discounting the future. A lot of our quant-based clients, 6 weeks is the outer limit of their time horizon. But how can anyone really decipher signal from noise 6 months forward? It's really difficult. Like, that's why anyone who's a Bitcoiner thinks decades ahead, and then they just ride through the volatility. That volatility is not what hedge funds can endure. I mean, there's a lot of reasons gold probably is going up. And at Fundstrat, we don't do commodities. I kind of regret not recommending gold because it's been so great. I mean, because, generally, I like to be helping our clients be involved with things that are going up. So I think gold's move is like
a good strategy.
Yeah, exactly. I don't want to fight it. And like,
what kind of business do you have? I help our clients' portfolios go up.
Yeah. So gold's been amazing. I I think what's really stood out is that you can explain gold's move by just pure technicals. Like I was talking to our technician, Mark Newton, yesterday, and he says that gold had a cup and handle pattern that the breakout was July of this year. Mm-hmm. And so the measured move should have taken it up to where it is now. But let's say price leads fundamentals. I think that July is also the time that the stablecoin industry started printing a lot more creations. And as you know, there's been gold stablecoins and dollar-based stablecoins, but a lot of the dollar-based stablecoin issuers are over-collateralized. So I think the stablecoin industry has been printing a lot of dollars, they're over-collateralized, and I think they've been buying a lot of gold. So I think that the stablecoin industry has been the newest bid for gold.
More so than even like a China central bank?
Yeah, because they've already been present. The central banks have been present for some time, but there's somebody new buying gold on top of the retail buying gold. And I think that would be my guess. Because, like I've now there's like 7 or 8 gold stable coins. Yep. Plus, there's big stablecoin issuers. And so that could be the bid to gold. Now, does that mean gold is unlimited on the upside? I don't know. I mean, I'm not studying it, so I don't know. But I think it's very bullish for Bitcoin and Ethereum because...
Why?
Well, gold moves first and then Bitcoin catches up. So I think that there is going to be the network value of gold just went up by a lot. And so let's say gold settles at 5,000. That puts fair value of Bitcoin, like 1.6 to 2 million if it matches gold's network value. So I think it's actually helping Bitcoin's future terminal price.
Lee then turns his attention to traditional finance, particularly hedge funds. He argues that the alpha these funds once captured has been largely exhausted. In the 1980s and early 2000s, hedge funds thrived because they exploited inefficiencies in retail investing. But today, every hedge fund has access to the same data vendors, tools, and algorithms. As Lee cleverly puts it, if you have a room of geniuses, the average person in the room is still average.
That would be 6 million Ethereum.
Okay.
Bitmine on Monday announced that we're at 3.23 million Ethereum.
So more than 50% of the way there.
Yeah, 2.7% of the Ethereum supply.
Okay. What is the purpose of the business? Just tell us a little bit about it.
Well, Bitmine is an Ethereum. Primary strategy is an Ethereum as the treasury asset. It still has a small Bitcoin mining business as its operating business, but now its primary treasury asset is Ethereum. And the reason it makes sense to grow the Ethereum holdings is that Ethereum as a smart contract platform with staking means that large holders of Ethereum can benefit from the power law dynamics, meaning you can be a benevolent entity in the community helping see DeFi and also as payment rails get built on Ethereum, help guide that process. And so we're working with the Ethereum Foundation. Today, Bitmine's 3.23 million Ethereum tokens makes it the largest holder of Ethereum in the world, more than the Ethereum Foundation, more than any other single holder. When we begin our staking, native staking, that's about a 3% yield on roughly 14 billion worth of ETH, and that's nearly 500 million of pre-tax income. That would make Bitmine one of the 800 most profitable companies in America. So it's basically going to be a Russell 1000 company. And for institutional investors, they've put a big allocation into MicroStrategy because that is the way that they get exposure to Bitcoin. But Ethereum, we've been writing about, is probably in a super cycle, similar to what happened to Wall Street in 1971. Because in 1971, the US withdrew from the gold standard. So the dollar became actually synthetic, completely synthetic. So Wall Street stepped in to make sure the dollar stayed the reserve currency. So they built futures, CDs, money markets, and it succeeded because within 10 years, even though the dollar was only 27% of GDP, it became 53% of central bank reserves and 80% of all financial market quotes. So the yen didn't win, the Deutsche Mark didn't win, or the French franc. In 2025, we're tokenizing more than just the dollar. The stablecoin is the Breakout product, which is a tokenized dollar. But as you know, Larry Fink, Robinhood, they want to tokenize everything on the blockchain, and they're going to build it on a neutral public chain, which is right now 70% of that is happening on Ethereum. So Ethereum is experiencing that same 1971 moment where Wall Street's rebuilding everything onto a blockchain, which we think it'll be Ethereum. Ethereum could recover its Bitcoin Ethereum ratios, 2021 highs. That would put Ethereum at around 21,000 per token. So it's, I think, an undervalued asset. And by acquiring more and staking it, we benefit from the power law. And so it's been successful so far. Bitmine is the 30th most traded stock in America today, trading $2.1 billion a day. And it benefits from, I think, our clear communication. We publish a monthly chairman's message that explains our thesis around why Ethereum is in a super cycle and why Bitmine is continuing to acquire and stake its Ethereum. It's early in the sense I can give you some generalized thoughts, but I don't really have an idea of what the following year looks like until early December, because then we're only 1 month left in the prior market. Because this year, for instance, I think S&P gets to 7,000, right? But if we get to 9,000, then it pulls from next year. So price being a little unknown, I think there's a lot to be optimistic about in 2026 because one, monetary policy is easing, and that's room for mortgage rates to come down. And we know there's a huge pent up market for not only housing to become more affordable, like through allowing capital to build cheaper homes and stuff, but for people to have relief from mortgages. The ISM, which is the benchmark of manufacturing confidence, has been below 50 for 32 months, the longest stretch in history. But once the Fed starts cutting, companies can get more confident. So the ISMs recover. That's great for the US economy. We know there's onshoring next year. That's GDP activity. And then AI, I think, is becoming, as you just pointed out, like robots, agentic, superintelligence. These are huge innovations coming next year that are good for earnings growth. So I think the earnings picture looks good. But how much is reflected in the stock price, we don't know yet. Like if we exit this year at 7,000, then there's plenty of room for stocks to do well next year. If we end the year at 8,000, then we're going to have a 30% drawdown.
Tom Lee's message isn't just about numbers. It's about systems. He's describing a world where blockchain and traditional finance merge, where stablecoins become the new banking rails, prediction markets outthink economists, and Ethereum becomes the foundation of digital capitalism. From Tether's $500 billion valuation to Truflation's daily economic insights to Bitmine's Ethereum empire, this is the dawn of a decentralized Wall Street.
That's it for today's look into BTC Insight. If you enjoyed this deep dive, hit that like button, drop your thoughts in the comments, and subscribe to stay on top of all the latest insights. Keep questioning, keep learning, and we'll catch you in the next one.